Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and this is for educational purposes only. Now that's out of the way, what are we going to look at today? Well, obviously, we're going to look at Bitcoin. As usual, what we're going to do is we're going to start off by recapping some of the trades that we've taken, because I want you guys to learn from it, especially the past few days. If you didn't understand technical analysis and certain parts of technical analysis, then the last couple of days could have really chopped you up. You can see here on the 15-minute chart on the screen, we've had plenty of up and down price action. And I want to talk you through, what's gone on, why it's gone on, what were the technical reasons. I know there was stuff circulating on social media yesterday about the US government selling 10 million Bitcoin or 10 million worth of Bitcoin or whatever it was. I don't give a crap. There was an actual technical reason for this drop. So I'm going to talk you through basically everything from this week's trades. So learn and yeah, hopefully you'll improve. So after this, by the way, we're going to then look at what's coming up or what I'm looking at next. Okay, so let's start off with Monday, shall we? So Monday, I explained this to the members on our Tuesday stream. Now, for me, Monday offered two potentially good trades, and only two. And that first one being, obviously, we had the weekend range, as usual. Very common thing to happen on Monday or Tuesday, it can happen on either days, is one side of the weekend's range. So obviously, you got your weekend highs here, and you got your weekend lows down here. One side likely gets swept, and if it's swept as a swing failure pattern, then clear excess at the highs, people trying to long this breakout of the weekend move, price reverse, closes back under the weekend highs, you got a short trade down, nice and easy, down, take out the weekend lows. Now, personally, I'm not going to sit here and laugh and tell you that I caught every single one of these, because this actually happened in the middle of the night, and I don't care who you are, I was sleeping. So this has happened at, 1:15 UTC, so this was 2:15 UK time. I'm not waking up to catch a trade, because there's always another trade to take. So that was the first move. So you could have locked yourself in there. I mean, roughly there, 3R, call it for easy numbers, 3R trade, so 3 times your risk. So if you're risking $100 there, then you could have made potentially $300 on that trade alone. So that's your start of your Monday. So GG's if you caught that and if you're awake during those hours. The next trade was a trade from a naked point of control. Now, this was, in my opinion, an easier trade to take, because you had your weekend and your Friday lows, coming in here. Obviously, we had the move up, we had the move down. We swept the weekend highs. Now, what you'd be looking for next is, let's sweep these range lows. If we are going to get a continuation to the upside, then we need to grab this liquidity down here. Now, you can call this, accumulation. So you can start looking at accumulation schematics. But either way, you've got a nice sideways range here we can see on the chart. Let's just draw this on so you can see it. So you've got a sideways range here. What we've done first, swept the high of the range, come back down, tested the low of the range, come back up, and then we've grabbed the liquidity from the low of the range. Now, once again, I'm not going to sit here and laugh and tell you that I caught this move, but I know a lot of the guys in the group did. Because what we had first is, we can see this on the 15-minute chart, we had the first move down and we actually front run this naked point of control. Now, I came into the group, into the my channel within the group, saying to the guys, there's no excess on this drop. We didn't hit the naked point of control. I'm not interested. Now, annoyingly for me, I then walked away to go see my little boy at that point, and then the next candle that came down, if we look at the footprint charts, let's zoom out. There we go. The next candle that came down. So here we go. So this is the first candle that came down. We did have some excess at the lows, but the point of control was kind of mid-candle. And we'd front run that naked point of control. Now, straight afterwards, the next candle opens up, and we move down. We sweep the people that took the early long. We've got loads of selling down here. We can see this. This is all volume. The actual profile itself is a delta profile, but what you can see here is volume. So we see a load of selling, 1.5 million down here, another 1.5, another 1.5 mil, 1 mil, 1 mil. Loads of selling down here. Triggering their stops, open interest is coming down. And lo and behold, you got your SFP, and then you had a long trigger. Now, did we know it was going to come this high? to where it did in the end? No, we didn't. We didn't. So you'd have been smart and you'd have trimmed off some profits here. Okay? Stops flat, then let the rest ride. Because that's what you do when you've got a winner. You let it run. Okay? Take some profits, pay yourself. So therefore, if it does reverse on yourself and you stopped out in a winning trade regardless. Okay? In the end, it did move up. So that obviously then moves on to Tuesday's plans. Now, coming on to Tuesday plans. Tuesday, it was live stream day for me. So I give a live stream, map out my low time frame and high time frame trade ideas. We do loads of live chatting together. It's not signals, but the guys know where I'm interested in taking trades on the chart. Okay, so that morning we came down here. So obviously I'd not taken this trade down here, so I'd missed this, but it's absolutely fine because there's always another opportunity for another trade, and that's what you've got to realize. Don't be scared. Don't always be worried about not being in a trade. Okay, you don't have to be in a trade all the time, right? So what happened down here? Well, what happened down here is at this moment we had the first wick down, then we came back up, and then we had another wick down, and we actually created a higher low. Now at this moment the stock market was breaking down. Okay, so the S&P 500, which is normally has good correlation, started significantly breaking down. Okay, so at this moment people are wanting to follow the stock market, so therefore they're opening up shorts. And again, this is the inexperienced people that are opening up shorts at range lows. Okay, bear in mind these are range lows. Look, we've talked about this already. Range lows, right? Do you short range lows? No. You either take profits on your shorts or you look for longs. Okay, and what happened at these range lows is, again, we'll come back to order flow. We'll open this up here. This is the right one. Zoom back out again. In fact, we might be better off going on to this one. Aha, here we go. Right, so obviously this was the initial naked point of control. We came back up, we came down. We came back up, and then we started to come back down. And as we're starting to come back down here, again, this is when the stock market was breaking down. So what we can see here is we can see the bears getting extremely horny down here. Look, they're pushing price down and they're trying as best they can. We can see all this selling coming in. See all these little B shapes, right? Again, this is something I teach within the Discord. All these B shapes of all these guys selling into this low. We can see volume upticking. We can see delta upticking as it's coming down. And again, I've talked about this before on the channel. What you've got to ask yourself sometimes is, what is the market trying to do? Well, the market is quite clearly trying to push price lower. But then you've got to ask yourself, is the market doing a good job? Right? Is the market doing a good job? So that's what we've got to ask ourselves. So we can see here, between this low and this higher low, CVD is printing a lower low. So therefore, these sells that are coming in here are being absorbed. Right? Now, they could be getting absorbed by a larger entity or many entities looking to long this and looking to squeeze it. Okay? So that's what we've got to pay attention to. So at this point here, once they couldn't break this low and we started to come back up, then that for me was a trigger for a long. Okay? So we'll go back to this chart here. Now, I've pointed this out in the group. If this creates a higher high, we could see a squeeze with confirmed bull divergences. Now, the divergences that I'm talking about is CVD divergences, okay? Right? Something that is really useful. It's probably the only indicator I will ever put any weight behind, CVD, okay? So between this low and this low, where we've got insignificant bullish divergences as they're all trying to sell in as the stock markets break down. So for me, that's a long trigger, right? And the long trigger for me, I was targeting to take out Monday's highs. Now, we took out Monday's highs and we just maintained structure. So therefore, I just let the rest of my trade ride, okay? Stops flat after that moment, and we just let the rest of my trade ride, looking for my next areas of interest. Now, I did have some areas of interest, okay? So now you sat here thinking, well, Spitty, look at this, you just winning. You don't ever take losses. Well, that's bullshit. That's bullshit. I've openly admitted losses on the stream before, and yesterday I did take a loss. Okay, so this is going into yesterday, right? So, coming into yesterday, we continued up. Bear in mind, obviously, we still sat in that long trade. So we're hedged right now. We're coming up, and we come up, and I had 2 areas of interest on this chart. Well, in fact, I had 3 areas of interest on this chart. Number 1 being a naked point of control here. Now, I did take a shot on this naked point of control, and they ended up getting stopped out in the end. So that, for me, was a loss. It was the first loss of the day. We never lost structure, and I was telling the guys in the group, saying if I need to see a quick break of market structure to the downside. In the end, we didn't get a quick break of market structure, and we just pumped straight through it. Okay, so we did have a reaction, but it wasn't the reaction I was looking for. So this was my loss yesterday. Next, we came up into the golden pocket. Now, this golden pocket is based on a pull from here to here. So this is an internal golden pocket. This is the macro high so far. So this is an internal golden pocket. Now, I was telling guys again, I'm happy to take a scalp from this level. Took the scalp. Didn't take enough profits on it. Again, I'll hold my hands up, and that's a mistake from my part. My stops were flat. So in the end, it was a 0 RR trade, shall we say. Okay, didn't win, didn't lose. In fact, if anything, I did lose a little bit because I lost a little bit in trading fees. Okay, I should have taken more out on that because we didn't again change structure. So this is something you got to take into account. This does happen, right? Okay, so let's move this out of the way. So the next area of interest for me was the naked point control above. Now, this actually didn't get any reaction at all. Now, on the 5-minute chart, you can see we wicked into it and pulled back, but it didn't really get any reaction because everything was still pointing up. We can see this on the 15-minute chart. We just pumped straight through it. So for me, there was no trade here. Now, my next area of interest, as I was saying in the group, was, you can see this on the screen, 30.4. So I was looking for higher prices, 30.4. That was part of my plan. I was looking for higher prices because, if we just move this out of the way, we had all this area here, okay? And this area here. It's a very sticky zone. There's a lot of volume up here. So this was my next area of interest, 30.4, okay? That's what I was looking for. Now, in the end, as I was saying at the time, clear above this, and this was this golden pocket, then I'm looking for that 30.4k region, okay? Then I noticed on the TPO profile, we can see here that this is a very thin move up, okay? So you can see here, we've moved up. We've done upwards accumulation. We've moved up. And again, more vertical accumulation. Now, this is where people, I'm just going to move this out of the way for the time being. This is where people get extremely excited because it's just going up. So if we just hide this, we can see it's just going up. This is where people get excited, and this is where people start thinking, shit, I've missed out the trade down here. I've missed out. I want to catch this. I want to get involved in this. All they're doing is they're seeing these little dips. No real opportunity to get in, so they're just longing. Okay? And we can see it. We can see it on the order flow. People are just FOMO buying into this. Now, this then creates this thin move up. Okay? Very thin move up. We could see that. Again, that's now filled in. But if we bring back the Discord screenshot, we can see we had all the volume at the start of the day. Okay? Which was here. Then we just had this thin move up. Then we created this big batch of single prints here. And then we started hovering around. Now, as I'm saying to the guys here, decent volume but no structure on the push up. Now, I'm looking for market structure breaks. Okay? Now, as I'm saying again, I'm keeping the guys calm. I'm not getting you to short every single move up here. I'm saying I want to see some weakness before I step in front of this now. Had my hands burnt on my first loss. Okay? Now, I want to see some weakness. Now, as I'm saying at the time here, looking at this chart now, I'm starting to see if there's no continuation from here, this is likely a double distribution day, okay? A DD day. Now, this is one of my favorite types of day to trade in the group. And effectively what it means is price opens up, you have a small range, then you have a thin move up, then you have another range. Okay? That's what it means. If you want to know more details about this, then again, come check out our website. I teach all this and so much more, including access to my trading plan channel for £60, or in dollars, that's $75. £60 over 100 hours of educational material. Okay? Plus access to my trading channel at what I'm doing and what I'm looking at in real time. Okay? Invest in yourself before you start gambling in the markets, because yesterday could have screwed you. Right? Okay, so double distribution day. Now, this is commonly referred to in the crypto space as a Bart pattern. Let's just bring back our drawing tools. Let's just hide this. And we'll get rid of these. This is commonly referred to as a Bart pattern. So what's a Bart pattern? Well, price pumps up, creates Bart's head, and then drops back down. Now, this happens a lot in crypto. Okay? It happens a lot in other markets too. It's not just crypto where it happens. Okay? But it's commonly referred to in crypto as a Bart pattern. Right? But the real term for it is a double distribution day. And understanding how to spot these early can give you some significant trades. Okay? So, from this, I'm looking for a sign of weakness, as I posted in the Discord. I'm looking for that sign of weakness. Because if we get a sign of weakness, then it's looking like a double distribution day. So what happened in the end? Well, we can zoom into this. Pull this back. Again, it's got another golden pocket on here. So, what we had, zoom in. 15-minute chart. We came up. We came down. We came up. We came down. Now I'm starting to see that now, on the 15-minute, we've broken a small amount of structure. Now, I'm not saying this is a breakdown here, but now what I'm looking for here after seeing this is I'm looking for an entry because I'm starting to see weakness down here. So we come back up, we come into the golden pocket, we also come into the local range point of control. If we just draw this on here, we can see here, we come up into this local range point of control, golden pocket, we've got the value area high just above it, we've got confluence. This is many forms of TA overlapping one another. This is what I am, I'm a confluence trader. I use many different strategies, overlap them, and that gives me the better probability setups, right? We'll come into this, take the trade, and then I just remain patient because if this does start to break down, then I'm looking for all those single prints, bring this back up, all those single prints to get taken and for it to trade like a double distribution day. Now, a double distribution day, typically speaking, we can start to visit daily open. In the end, we came back down into daily open. We continued lower, got acceptance back into the previous day's value. And then if this happens, bear in mind the daily closed outside of the previous day's value, opened outside the previous day's value. And in that instance, then we can look to play the trade to the other side of the previous day value range. Now, what happened down here? Why did I take another long on the back of that? Well, quite simply, let's come back to this. Let's come back to this chart here. Where are we? Let's just reset this, shall we? So after yesterday's spike down, here we are. No, not that one. What chart am I on here? Aha, here we go. I'm on the 1 minute chart, that's why. This makes more sense. So, coming into that value area low, we can see here that people start getting horny and shorting into the lows. Okay? Once you start seeing people get horny and shorting into the lows again, okay, we can see here a lot of volume, a lot of selling pressure coming into these lows. Right? We can see here, right on the low here, got net shorts coming in, 2.2 million people shorting into these lows. We can see this. We've got some excess. Okay, even a lot of the guys in the group were pointing this out in the group. Got excess down here. Then we get back above it. As soon as we get back above it, and I see that, again, the bears are trying to push price lower. They're not doing a good job. So, just like we did back here, we counter trade it. Okay? In the end, got a nice counter trade. Did I know it was going to come up this high? No, did I? Hell, I didn't know it was going to come up this high. But, after taking early profits back at daily open, okay, I then stops flat and then let the rest run. And now I'm in a very comfortable position because I'm hedged, short from the lows, long from the highs. Now, eventually, one of these is going to get stopped out. It's either going to be this one or it's going to be this one. And when it gets stopped out, I'll be stopped out at entry, but profit's taken, so it's a winning trade. And then it makes no difference what direction the market goes next. Okay? So coming back to the Discord, talk the guys through this. Again, I'm very open and transparent. I don't bullshit within the group. There's no bullshit with me. And that's how I work. I'm a proud Yorkshireman and I just speak properly, speak clearly. Right? So, one loss earlier today. This one here. Good setup, but I took the loss. Next trade for me was a scalp, but with the fees, etc., I came out at break even. Again, this one here. Right? Then we were sat waiting, patient, looking for one of two things. Either A, a rise to our next area of interest, which was the 30.4k level, which I talked about earlier, or see what the market gave us. In the end, it gave us a market structure break on top of a double distribution day. Therefore, the short wasn't pre-planned, but it developed as price action did. This is what we must do as traders. Evolve, adapt, and respond to new market data as it presents itself. 1 minute I can be bullish, 1 minute I can be bearish. It all depends what happens. Okay? So, and I'm saying to the guys, don't beat yourself up if you didn't catch this move. It'll come with time and experience. We just have to execute patience and wait for the setup to present itself or to come to us. So today I went from a loser into a winner in the end. Now, that needs updating because that's not fully up to date now because it's actually more than that, but still. Okay? So, hopefully, I know it's a long waffle, is that? It's a good 20 minutes worth of waffling, but that's 20 minutes worth of education there. Okay? Learn from it. Next, what am I looking at? Right. So, first and foremost, let's get rid of this. We still have, as we all know, the old macro range here. Okay? This is the macro range. Now, after breaking out of it, we've still not come back and back tested it. And would it be a successful backtest if it did happen or not? We'll have to wait and see. Okay? So, as I've said many times, if we do end up rolling over here, then first and foremost, there's a lot of eyes on this level. So if this comes into play, then we need to see what happens. Now, this isn't a straight line for me. This isn't a single level because the volume is actually just underneath the level here. So again, if it comes down, market structure break to the upside, you got a long trigger. Okay? If it doesn't do that and it just rolls over, then just let it roll over and we're back to trading this old range. Okay? I've done more detailed levels on previous videos from last week. Okay? When it comes to this top range now, well, we've got one whole range in my eyes now. So you can either trade it as the bottom section of the range, which is within value here, and this being the deviation. Again, it's something we've been posting on Twitter for quite some time. So if we manage to successfully hold here, this value area high here, and this old range high, now we can look for another push up. Does it push up? Do we take these highs into that 30.4k level and reverse market structure change? Well, you potentially got a short trigger there and another take profit on your longs. Or if you don't get this and it just continues up, then do we just take out the highs overall? Again, either looking for a swing failure pattern of the highs, or do we move up higher and start looking at this liquidity here? Because there is liquidity still above these highs. Okay? So that's the plan for the downside. That's the plan for the upside. Until this breaks and we get a range resolution out of this, then there's no point in flipping macro bearish. There's no point in flipping macro bullish. We are just range bound. Okay? So whether you want to do it as two separate ranges, the top and the bottom, or one overall range, either way, it makes no difference. It's range bound. Okay? And the trick with a range bound market is you don't get excited at the highs. You don't get excited at the lows. Okay? Don't get bullish here. Don't get bearish here. It's as simple as that. We'll just trade this range until it breaks. One side will eventually give and you will take a loss. Absolutely fine. We've got to take losses. It's part of the game. Nobody has a 100% hit rate. And anyone that tells you that they've got a 100% win rate, delete them, block them, remove them from your life because they are talking out of their ass. Okay? Right. I think I've had enough ranting there. Hopefully you've learned something today. If you have, let me know down in the comments. If you want me to continue with these trade recaps and also trading plans, then again, let me know down in the comments. Hit that like button if you've enjoyed it. And if you don't subscribe, then why not? All right, guys, that'll do. As you were. Bye-bye.